sure my frame rate's good. All right. Pardon me again. I always have a scratchy throat these days. Aha. Discord had me at 15 frames a second. Those bums. They do that to reserve bandwidth. All right. So, gonna run a little bit of a different format today because I didn't really care for anything CNBC put out this morning. So I'm gonna go revisit a couple old school callouts that worked out pretty good and are still working. In the meantime, take a quick look at SPY. We're basically staying in the middle of this range candle. I thought at least we would go and visit the top of the liquidity zone. That's the top of that candle. We may still do that. It's only 2 o'clock. But it's kind of grinded to a halt. And gosh, if you look at the 5-minute chart, we've basically gone nowhere. But there's another zone here that we've wound up in, and that's kind of where we started. Right at the top of that zone or just outside of it is basically just a mean revision of what we've seen already today with our bearish measured move from the top down. So kind of diddling in the middle. It's not going to really do much. Maybe we'll get a couple more little plays into the close, but it's a Friday. I wouldn't chase nothing into the close on a Friday. I think I will maybe take advantage of some of this as an opportunity to get a condor on, but I don't think it's going to move enough to really do much. It's too late for that. Looking a little further out, you can see we've gone through range expansion. We had yesterday's wild ride, and now we're contracting. So yet another diamond pattern. That 2-hour chart tells me that there's a possibility of a trend change here, and it's kind of similar to what we had here. We had another diamond here, only the left side's kind of gone. Now we've got the full story. So we could go either way from here. Next week will be kind of a rotation week. I think either A, we will continue into the bullish trend, or B, we will rotate down and come into a pullback zone, probably down around here. That's possible. But looking a little bit further out, we've already made a really nice 2-for-1 measured move anyway. So it would be awesome to have that pullback give us a mean revision and give us an opportunity to get with this market that's looking to melt up. A lot of people were saying, oh, you can't call the bottom, blah, blah, blah. And then some people were saying the bottom was in here, 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 here. We just know we're rotated past the mean, and that usually means we've got some good chance of continuing a little higher, but healthy pullbacks are always warranted. Also, that's a big cup and handle, and we've achieved the right side of the cup, so to speak. Any day now, we should be getting a handle typically in this formation, and we've come to 2 different rim lines here. We've got the yellow line here, which was our lower rim line, and you can kind of see I've got a red line up here that was kind of the upper rim line. We've met both of those. At some point, most cup and handles will do exactly this. They'll come to one or the other previous high-ish area, but not quite make a move all the way to the previous high, and then they'll pull back, go with some sort of mean revision, and then continue grinding on. So hopefully we get that going into next week and we start to see some decline here to where we can pull back a little bit and give us a chance to get into what's looking like a melt-up bull market. It's just kind of slowly grinding on. Deny it as they will, the Fed has been kind of pivoting here on their quantitative easing. They've been done with their quantitative tightening now for several weeks. And if you look at the liquidity of the central banks, you'll see that it kind of started to reverse here and pick up. So I don't have a chart for that, but you know what happens. Effectively, we've seen this game before. It's just a slow melt up. So these trends tend to start kind of on their own. But looking at this volatility is not forgotten. There should technically be a little bit of a pullback here to give us a little bit of a go ahead and find our continuation pattern and move with it. Let me get into a little bit smaller of a time frame here. So I'm going to look at the 5-minute chart, and we're kind of at this area where we should be careful here because let me zoom out here. coming into compression. And by about Monday or Tuesday next week, we should have a move out of this diamond pattern. So this is a, let's be careful. We can trade from neutral here. That's okay. But just be aware that things are going to start moving probably into the middle of next week. So just want to be a little bit more cautious. All right, moving on. I didn't like a damn thing that CNBC really said, so I'm going to go and visit a couple of old friends here. I have a list of stuff where we made some callouts that were just glorious and followed through, and now we're at a point where we could see exactly what we're hoping for, a little pullback. I'll start with Google. Let me zoom out into a weekly chart. You can see we've made that beautiful 2-for-1 measured move right to the number. I mean, this is your analyst, your mainstream analyst target up here at 140, and that almost plays out exactly with what SPY's doing. That's basically our second cup handle, or our second cup wall rim line area, as I like to call it. Here's the first one, and we went right to the number. So now we're looking for some consolidation, some pullback. I'd love to see a mean revision here, but that may be off the table because we're starting to accumulate here already, and it's threatening a breakout. So let's see what happens over the next few days. And I think probably by about midweek next week, we should have an answer of either we're going to pull back and make a mean revision, or we're going to just continue climbing higher and hit that analyst target anyway. That was a pretty easy trade to go long on, but it was probably a little difficult to hold on through this mess, right? Well, this is exactly what I like to see. This is measured move A, measured move B, and then a massive pullback. But look, you got legs here. There's your mean revision, or your 50% retracement, whatever you want to call it. And you had a chance to get long again. And dude, that was one hell of a run. So when you pay attention to this sort of thing, it makes sense on every time frame, and it certainly has. So we're kind of setting up for I hope it pulls back. I'd love to get back on that ride, but in the meantime, I'm going to sit on my hands and wait for the chart to tell me what to do next. And into the next equity here, we have Microsoft, same kind of scenario. Only Microsoft is in a range. So we've had, I didn't have the boxes left on, we've had quite the run. We actually made a very rare 3-for-1 from the bottom here, or if you want to just call it a 2-for-1, essentially this is like 1, this is like 2. We've achieved that high. Now we're kind of in an area where we marked that out with the box. That's our known liquidity zone. There were sellers here. They were ready. Analyst targets up here at 415. That's a little psychotic for the short term, but the midterm, long term, maybe not so much. Maybe we could get there. Looking at this, we're pulling back into a range, and we have trades that we can have in here. We can swing trade this. And knowing that this mid-range was here when we melted through that the other day, it was pretty easy to see it as resistance. And we gave 2 very nice bearish swing trades on Microsoft. And now we're making the bounce back up to the next liquidity zone. Next week, I would suspect that at least one day next week, we're likely to make an A to B from around here, around 341.20 to about 345. Pretty likely move next week at some point. And then if we can accumulate above that, we can certainly get back to that previous high and start touching this liquidity zone up here. So in the meantime, this has made a very nice bearish 1-for-1 measured move just about to the bottom of our lower zone. And we could be setting up accumulation to at least return to mean, which is right here, top of this range. And then if we get into a consolidation, by the end of next week or the beginning of the following week, we could see leg 2 start to spring out. So keep your eyes on Microsoft. It will certainly be a good indicator as to what to expect with the rest of the market and indices, because it's a big part of it, along with Apple and Google and all the big names out there. They move the market. So when you pay attention to what these individual equities do, you kind of get a good idea of what sort of rotation you could see for opportunities of trading in the market. Let's move on a little bit more. I'm going to look at one that kind of stuck out to me and has made some very awesome plays, but I do have kind of a short-term target of about 250 on it. Pan West, PANW. That was such a beautiful setup, but now we're in an interesting area, and It has that 2-for-1 setup. Here's your 1-for-1 done. We've accumulated over that, came back into range. We've tested support, and more or less, this is a nice little cup and handle here. Love to see it hit this 250 zone, pull back one more time, and give us some range out. And we could very easily see that coming up here pretty quick. You can see just how beautifully rounded that little cup is there. Rim line's right here, right at about 249.20 to 250, somewhere in that range. And once we break out of this after pullback, cool, we could see it run. But look, we've already made a significant pullback here. So next couple days, consolidate. It'll give us a sign. It'll tell us that, hey, you can get on the ride now, or maybe you should wait another couple of days here before you swing it. So again, we've got some lofty targets up ahead on this thing. Looking at the top of the range, analyst targets up here in purple at 300 bucks. We've got this whole move from here to there to get to. That's quite significant. So that could be one hell of a swing trade. Just kind of be patient and wait for the setup to tell you when to get in on this thing. And definitely note, this has already made a very nice 1-for-1 overall here anyway. So if we want that third move, it's kind of rare, but it is a pretty reasonable probability for a good swing trade setup. Scenario B is we reject at this pivot point and we come down below support, and then we just come and make a mean revision of this mess, and we end up down here. Even better, one way or another, we'll have a direction to trade on this, I think, by about the middle of next week. So pretty much everything I'm talking about today is going to be, let's see what happens by the middle of next week before we just get, into an aggressive position. But in the meantime, we should have some little swing trades that we can do, over Monday, Tuesday, maybe Wednesday. Moving forward, let me get to the next one here. I've got Tesla. Everybody loves Tesla. A friend of mine said, I don't know what the hell Elon said yesterday, but they didn't like it. Well, that wasn't much of a drop compared to this one. So I've kind of had this set up for a long time. I've been trading all of this stuff. We've made a very clean 1-for-1. We came to the penny almost on this orange zone that I mapped out here, and that was just a previous high. Whenever I see a wick, I mark it out. There's liquidity here. So if on the weekly chart, this would be marking out a wick. That's also kind of a mean revision zone. So if you take this entire trend into context here, that's the middle of it. That is a 50% retracement or a mean revision. So we've done that. Now we're accumulating back down in the bottom of move number 3 on the measured move scale. So I'd love to see Tesla consolidate for a while and then give us either A, a bullish breakout, or B, a mean revision. Being as strong as it has been, this is likely to shake out into a reversal here and at least come up to this zone here. And that gives us a short-term or medium-term swing trade opportunity probably over a few days. I'm not quite jumping into spreads just yet on this thing, but I'm looking to probably by about Monday or Tuesday next week. And I want to see if it gets out of this range first. So there's kind of a short-term target, medium-term target. Maybe it'll take a little longer than a week to shake out. And I'd love to see more bullishness come up and break this level and then eventually get back to that mean revision zone and up through it into the top of our deck here where we have like 335 in sight. So that's the bullish scenario. And again, next week we're going to see the rotation. It will present itself to us. The bearish scenario is this is our leg down. Here's our accumulation. And if you look, it is a very nice little diamond pattern. Range expansion, range contraction. Monday, Tuesday, Wednesday, probably going to have an indication of what's going to happen. And this is your key support. This is your key resistance. If you get a break below this support level, this will certainly print a very easy bearish measured move here. And I'm just going to draw this one out and leave it on the chart for now because this will be significant to know what's in store if the bullish scenario doesn't shake out. Because I like trading bearish. It's fast. It's very, very easy, quick money when it breaks. All ranges break. This consolidation is a range. When it breaks, you're going to know, and you can certainly have either a bearish opportunity or a bullish opportunity. Kind of knowing that we're still under this gap here tells me kind of still in the middle. It can go either way, and that gap goes right to here, and that gap also can reject and go down into here for a mean revision. There's also a previous low here. You probably want to strike a note there, at least kind of mark that as an area of interest. It'd be about half your measured move, and it would also be a liquidity zone where there likely would be some buyers. It's a previous area of interest, so just kind of note that. Maybe make that slightly different colors so you can kind of know it's there, but you don't have to let it stand out that much. So again, next week it's going to be a tell. In the meantime, if you wanted to try to trade this range, you might get enough range in here to build yourself a long-term condor. Running spreads, a couple months expiration out or more would be advisable on that. If you want to run from neutral and just trade the break, cool, you can. You can trade it in both directions when you got lots of time on the position. So maybe gives us a good neutral position to build from if you want to start trying your hand at trading options from a neutral position. I wouldn't recommend holding on to too much that's going to be subject to time decay, though, because it can get pretty vicious with time on Tesla as well as volatility swings. This swing here yesterday pumped the crap out of the put options, and realistically, strikes down here were like about 2.5 times what they should have been for price. It was just sick. But now that's all fallen off because we're ranged back out. So maybe we get Monday and Tuesday of flatness. That'd be awesome. We can kind of build a neutral position, maybe trade the break, sacrifice a loser, run with the winner, whatever you want to do. There's going to be many opportunities coming out about next week. So definitely be in tune with Tesla. Next on my list, I have Humana. And this is another Jim Cramer favorite stock to trade. And God, they're like permabulls on this thing. But dude, that's a hell of a gap down. Very similar to what we saw with Microsoft. It's trading in a range, a 3-range zone. And it's at the bearish end of it, though, instead of the bullish end. So let's look further left and see what things kind of tell us. Well, successful company. It's done its thing. Common trend lines up here. If we wanted to lay this out as a dead cat bounce, sure, it's made most of that. It's got the what some people would note as a 33.3% fib retracement, or whatever the heck you want to call it. Cool, but there's still a mean, and it's just at the top of this zone. Going back into a 2-hour, we're trading in a very interesting place. And that's why it's all labeled in orange, and it's just knowing liquidity right here. And we're just above it. So if this sets up to be a bullish measured move somehow, we could get a quick run up here to about 463, 464, maybe even melt our way through this and hit 468, 469. The other scenario is there's been a hell of a big move behind this, and we've kind of found this nice little inverse head and shoulders pattern right in our known liquidity support area. So this makes us a key pivot very cleanly at 445. So if we can hold that, cool, we can resume and go bullish through this. But if we can't hold that, we're likely to visit this again very quickly. So just kind of take that as a note on this one. Short term, I don't know that you're going to see very much for options trade, but as an equity trade, this thing's pretty quick moves. And, you can run a few dollars a share in a day pretty easy on this thing. It is kind of a good day trading stock for the equity. The options, they're all right. They're not the greatest options. I wouldn't tend to trade very many option positions on this because this is very volatile, and this is going to mess with those options prices. It's going to make the risk a little too high for my taste. So I would prefer to trade this as an equity rather than an options trade. Just my style, my opinion. Let's see, let's go through Apple, and then I'll finish it up with WTI to keep it kind of short. So Apple, as you know, is about 7% of the S&P, and man, when it moves, everything moves. Again, clean 2-for-1 measured move. This time we're outside of it just a bit, and we're in this nice bull channel here, but we've gone pretty much parabolic from that base on up to where we are now. This is telling me there's very likely got to be some kind of pullback here. If not, this will be kind of parabolic outside the channel, and then we just take and measure this whole move here and stick it up here. Can we hit 233, 235 somewhere in that neighborhood? Sure can, but kind of watch what it does here. This is kind of a critical area, and I marked it with a line. I wish I could mark this with a zone. Can't quite do that, so I'm just going to kind of draw a secondary line on top of it to lay that out, and look, we wicked it exactly on the parallel. So kind of keep an eye on this area. It can consolidate and run parabolic. Sure, this is a very highly emotional stock, I like to call it. When people hear things about Apple, they react, and sometimes they overreact. So parabolic breakouts tend to happen when people get overzealous about things. And if you go and listen to some of the things that some of the major players in the market have said, what is it? Sell when they're greedy and buy when they're afraid. Well, that's the emotions you see on this chart. So when people get afraid of this high, you get a wick like that. And that was a very quick set of limit orders that took it there. So let's see if we can hold the line here. This is our key support area. If we can trend out of this, think of this as an accumulation area. It can certainly break out and go higher, but just be very cautious here, because if this strength doesn't hold, it will almost certainly come back and retrace some of this stuff. 181.50 is about a key pivot area I would like to make note of, and that would be about a mean revision of the upper half of this 2-for-1 measured move anyway. So just kind of be aware that that's a likely scenario to break down from here and at least pull back if this breaks down. So just kind of know this zone, be aware. Is it going to happen next week? I'm not so sure with Apple, because it's at a upper range limit, and it's just kind of very likely to play in this range. But Monday we should likely see a mean revision of this guy here anyway, so about 194.80ish. I don't know. I'm going to kind of see if we get either a break above this high into a 2-for-1 and then continue to go parabolic, or if we're going to pull back first. Love to see a pullback. Like I said, it gives everybody an opportunity to get on the ride, but at the same time, if this breaks down and fails, that looks a lot like a double top to some people, and this being an emotional stock, when people start to panic, well, you know the scenario. So just kind of be aware of Apple and be mindful of a lot of the bigger stocks going into next week, and just kind of look for your rotation. It'll show you an opportunity. Just be patient. Wise trader once said, good successful traders tend to spend about 80% of their time waiting and 20% of their time trading. The average not so successful trader spends about 80% of their time trading and 20% of their time waiting. So take that to heart, because we're going to see a lot of that shake out next week. And if you're patient and you just time your entries and your exits correctly, or wait for the market to come to you and be ready for reaction after that comes to you, that's going to be a very valuable trait to have by the end of next week. I'm very sure of that. Last but not least, let me look at WTI. And again, I've been talking about this for a long time, and about a month ago I said, watch this for rotation out of this channel. And here we've certainly made that rotation out of that channel. And we've even kind of stacked up. It's not a very big mover, but it's made that measured move. Now we're looking at mean revision. I'm going to take and add another line here, just kind of an area of known support. And it's also a mean revision of the previous little move here. We've had a little bullish 1-for-1 here. I'd love to see this pull back a little bit and then continue to trend up. I still have a mean revision target overall up here at 538, and that is just half of this big old trend here. But we've got some resistance to get through first, and this is the liquidity area we're going to be very interested in on the daily chart. That's where I'm going to draw my box, right on that wick there. And if we can chew through that, we can go higher. So first, we'd love to see a pullback, and we'd love to see a little bit of range in here, and then accumulate and break out eventually. So definitely keep an eye on that. This is one of the stocks I'm looking at making some wheel trade moves on, but it just doesn't quite have the options volume that I like for the wheel trade scenario. I wish it had more options volume. There's plenty of other oil producers out there with kind of a similar chart, but cost basis wise, it's not going to be kind to the entry level traders with medium to smallish accounts trading at 4.5, 425. That's kind of about the limit for your beginners who are starting to understand the wheel trade concept anyway. So I just wish it had more volume because it'd be a great test bed to teach people how to make that wheel trade work for you or that income strategy work for you. On the other hand, I'll take a quick look at open. This thing has been just an absolute gold mine. You can see all my dope on here, all of my buy to close and sell to open options chains. I haven't added any of them here because just I do it too frequently to keep track of it all. You can see this jumbled mess right here. I was trying to build a map to show people exactly what I do when I take those positions and how I work them. I'm literally trading them intraday on price action and swinging in and out of the short legs. Well, I started trading this thing when it was around $1.25, just a little above that, and then I got back into a little bit of a dip here. My cost basis beat the hell out of this trend. By then, I was down to about an 18-cent cost basis, and by about here, I went negative. And now I'm currently at $1.45 negative cost basis while this thing's trading at almost $5. It's $4.79, and it has just been a freaking income machine for me. It's a penny stock, and that's what I get at when I start saying things like that about um, WTI, for instance, in comparison. I wish it had the volume that this had because it's awesome to teach people how to do that from a starting point around $5 or less per share. Um, Nonetheless, you kind of look for these things, and they make sense to you when they've hit their bottom and they've gone sideways enough. They're stable enough to where they're not going to be delisted or kicked out of the kicked into the OTC markets or anything like that. It's starting to make it slow grind back up. Sure, there's resistance to get through. There's going to be a lot of trade opportunities here. But in the meantime, on this thing, I have negative risk in this thing. I'm not going to lose a dime if this goes to zero. In fact, I've kept all that money. It's all income I've generated on the options. I'll just keep running on this thing until it starts to make a nasty bear trade or bear trend, and then I can just up and quit. I can move my money into something else. In the meantime, this is an easy trade to make for me, and that's what I love doing on these little penny stocks. When they've got the options volume on hand, why the hell not? So I'm going to start thriving on that, breaking into that a lot more with some developing videos and stuff like that to explain the strategy and explain this in a little bit more detail. But if you can get out there, check out our website. I've got a really nice article on how to trade the wheel trade strategy. In that article, I do not recommend trading it on penny stocks because of the inherent risk with penny stocks, but I would absolutely recommend at least practicing the strategy on a penny stock before you go and throw some real risk at a large cap. So just kind of read that article, understand the process, and it will take you places, I promise. All right, guys, I'm going to wrap it up with that. Thank you for joining me. Have a wonderful weekend. Be safe out there, and just be very diligent for next week's trading. I think we're going to have some grindation, and eventually we'll have a rotation, and it'll give us a let's be bulls or let's be bears scenario by about the end of the week. Thanks again, guys. Have a wonderful one.